Hey there, my name is Kris, and I'm with the Mindbloome Exchange. And I have gotten over 12 plus requests with why traders are going, why am I failing in the market? I don't get it. And I have tried to compile in hopefully 10 minutes or less some action steps and what I've noticed overall to hopefully give you some insights and right away some key tools that you can take away from here to make yourself and hopefully become a better trader. Now, first and foremost, did you know? Now, here's a very good tip that 90% of traders lose money. That's right, 90. Not because you don't know how to trade or they don't know how to trade, but because you can't control your emotions. That's right, your emotions. What I mean by that is, well, you have a couple emotions, hesitation, as well as getting very emotional in the market. What does that look like for somebody who's like, well, what do you mean? Well, let's say the person that will never pull the trigger. What I mean by that is, let's just say here, you have a nice W pattern. What I mean by a W pattern, it's a typical bullish pattern or double bottom, as some would say. And then from here, you have a nice little top, and then the market goes. Now, if you are that type of hesitant person or that hesitant type of trader, which I see quite common, they will wait till the market breaks, goes up, goes down, goes up, goes down, goes up, and goes, oh yeah, I should have gone into the market. Shoulda, woulda, coulda, but didn't, right? You didn't want to pull the trigger. The second type of trader is the FOMO trader. What I mean by that is that the market is driving up and then they're like, oh shoot, the market's going up. I need to get in. Problem here is that's probably not the best place to make your trade with the risk with a very low risk to reward ratio, which is may cost you a lot of money if the market goes against you. Those are the main ones that I've sort of been seeing quite a few people that are fear of missing out or the people that just don't pull the trigger. So some of those biggest emotional mistakes, like I said, was chasing delayed entries or fear of missing good trades and not maybe getting into the market or revenge trading, right? So if you mean, oh, the market's going up, you got to get in, or when the market's going down, you get out and you're losing a lot of your profits. Now, I've tried to find 3 steps or 3 tools or strategies that will hopefully help you become a better trader. Step 1, set clear rules and stick to them. Example for myself, I will only risk 1% per trade and stick to my stop loss. Now, let me show you a trade I just made recently. And yes, I do trade full time, so I'm not, no demo, no nothing. I trade on interactive brokers is my, and then I trade on a couple others as well. So this was I guess you could say, this was the level of support here, here, and here. And I noticed this was my level of my bottom, my top, right? Another bottom, and this was the top here. And that flagged me because this, if you know anything about price action, if you don't, my apologies. This is your top. This is a lower high. What does that mean? That flags that possibly there may be a bearish turnaround going down. Well, as soon as we broke here, which I got my entry in, I got into the market and put my stop loss just above this top here, this price action point there, in order for this market. Well, what does that risk to reward look like? Well, it was a 3.22 risk to reward, which is not a bad trade. And then I have set it to, where is my daily candle so I can show you, or my daily time frame. And all I set it down to was that next level of support, right? Nice, easy, quick, and peasy. Boom. That's where I'm going to go to. Nice little market down from there. Step 2, right? So always have a proper risk management and always have your clear rules and stick to them. Step 2, use a trade journal to spot emotional mistakes. What I mean by that is for the students that come to me and I deal with, I normally try to give them a basic trading journal that I like them to mark down all their trades in. And now you can start figuring out how you're feeling, what frame you're using, when are you entering, what time frame, when's your session, what stocks or pairs or cryptocurrencies, etc. What was your risk, etc. And what was your reward? And then now you can start finding out some ways that you can learn a little bit so you can become a better trader. Having this data allows you to improve and evolve as a trader. Maybe you like scalping. Maybe you're just sick of swing trading, right? You just want to take more trades. Or maybe you're doing a really good job and you're like, you know what? I'm doing over 1 to 3 or 1 to 4 or 1 to 5 risk to reward. So risking $1, getting $5. This is awesome. I'm doing quite well. And maybe it's just proving a point that you're a really good trader and it builds up your self-confidence there. Either way, having a trading journal is key in your success. And the third point is when you're trading and you're getting emotional, right? And that's kicking your butt a bit, you need to step away. You know what I mean? If I'm going, oh, I need to get in here, I need to buy. And then I'm like, you know what? This is a good buy right here. And then this is a good buy. And this is a good buy. I'm forcing the trade rather than the trade coming to myself. You will always, I'm not saying always, that's probably a wrong statement. There's many situations if you try to force the trade, the market will do what the market will do. Up, down, consolidate, middle, doesn't matter. The goal is we follow what the market gives us and we let the market come to us so that we can use the appropriate price action, risk management, as well as trading strategy to maximize our profits and minimize our losses, right? And lastly, trading from my perspective is about 80% psychology and 20% strategy. Now, if you don't fix your mindset, no strategy that I know is going to save you. Now, if you want to truly master, trading psychology, check out my profile and or send me a DM. More than happy to help. And long story short, my goal is to only create more value. So tell me, which strategy do you like? Do you like the journal? Do you like the risk management tools or the rules that you want to write down? Or do you like where you step away from the trade itself so that you can maybe calm your emotions down? Now, if you found that this is a value, a like, a comment, a share, a boost always helps. And if you want to give me feedback of like, hey, Kris, I really enjoyed this. Or, hey, can you explore a little bit more on risk management? More than happy to do so. My goal is to help you become a better trader, trade smarter, and live better. Name's Kris from the Mindbloome Exchange, and I truly do appreciate your time, and I hope you have a fantastic day. Take care. Have a good one.